Hi, do you often hear about options from experienced investors? You may have heard that options have higher leverage, and you can make 5 to 10 times return on investment in a single trade. But you can lose everything if you're wrong about the market direction. Today, we'll start with the basics about options so you know what options are. We'll talk about 5 key points today. 1. What are options? 2. Profit analysis of trading stocks. 3. What is a put option? 4. What is a call option? 5. Differences in leverage between options and stocks. So, what are options? An option is a right to trade stocks at a given strike price before a given date. These are the key components of an option contract. Put option, the rights to sell stocks. Call option, the rights to buy stocks. Strike price, the agreed price to trade stocks. Expiration, the deadline to exercise the right of the option. And an option contract in the US stock market is 100 stocks. Let's start by revisiting the profit analysis of stock trading, so you get a better understanding of the leverage of options. The market price of AAPL is $125 right now, and buying stocks is simply using $125 in cash to exchange for a share. You make a profit when the price rises, and you lose money when the price falls. If you believe AAPL will fall in price soon, you can short the AAPL. So you make money when the price falls and lose money when the price rises. No matter you long or short stocks, the probability of profit is 50%. As long as you hold the position and Apple stays in business, the stock stays valuable. Let's look at the definition of a put option. A put option is a right to sell 100 shares at the strike price before expiration. Looking at the AAPL price now, if we long a put option at $120 that expires next month, it costs us $1.58 per share for this put option contract. Since each contract is 100 shares, we spend $158 in total. Looking at the profit analysis, a long put is similar to shorting stocks. If the stock price falls below $120 before expiration, you can exercise the put option to buy cheap AAPL stocks from the market, then sell the stocks to the put seller for $120. But if the stock remains above $120, the option expires worthless and you lose the $158. If we combine the profit analysis of long put and long stock, you can see the put option is an insurance against market crash. You can use long put to set a stop loss to your stock position. Let's look at the definition of a call option. A call option is a right to buy 100 shares at the strike price before expiration. Looking at the AAPL price now, if we long a call option at $130 that expires next month, it costs us $1.55 per share for this call option contract. Since each contract is 100 shares, we spend $155 in total. Looking at the profit analysis, a long call is similar to a long stock position. If the stock price rises past $130 before expiration, you can exercise the call option to buy 100 AAPL stocks at $130, then sell them at the market price. But if the stock price remains below $130, the option expires worthless and you lose $155. If we combine the profit analysis of long call and short stock, you can see the call option is an insurance against market boom. You can use long call to set a stop loss to your short stock position. So, what are the differences in leverage between trading options and stocks? Since long call is similar to long stock position, we can use profit analysis to look at the differences in leverage. If you have $155 to invest, you can either long one stock of AAPL using $125 or spend $155 to long a call option at $130 that expires next month. If AAPL rises to $140, a long stock position makes $15 in profit, while a long call position makes $845. But if the stock price remains below $130 after 1 month, a long call option expires worthless and the position loses 100% of investment. If the market goes according to plan, the leverage on options will make much more profit than stocks. But if we are wrong about the market, the stock drops in value, but the option expires worthless. Tune in to the next lesson to learn about factors that affect option prices. If you enjoyed my lessons on trading options in the US stock market, please like and share my video and subscribe to my channel. Thank you.